Okay, it's Greg Wolf from Options University and Options University Strategist. Today is April 28th, 2008, and this is a trade review. We have initiated a trade this afternoon in Nokia, NOK. We are going to be purchasing a diagonal spread in which we are long the July 29 calls and short against them the June 32 calls. The July 29 calls were purchased for $2.05, while the June 32 sold against them were for 40 cents, which leaves us with a debit spread of $1.65. Basically, our mode of thinking here is post-earnings. We saw a gap down after disappointing earnings from the Finnish telecom company, and we are looking for that gap to be filled back up to about the 32 to the 32.5 range. Other stocks recently have had a little bit of problem after earnings and then drifted up slowly from there to give us some upside potential. Three stocks that come to mind that happened in that particular scenario recently were EMC, GE, and especially Oracle. Oracle stands out to me the most because it looked quite a bit like Nokia. If you compare the charts, we saw the gap here in Oracle after their disappointing earnings, and then we drifted right back up to where you see it now in the close to the 22 range after gapping down to 19.25 after their disappointing earnings. Now, Nokia is a Finnish company, as I alluded to earlier, so they could not take advantage as much as other companies of the weak dollar, which could have been reflected in their earnings statement. We chose not to go too deeply in the money with our long calls. We didn't want to purchase too much intrinsic value, simply because, if I can go back to the chart here, we're looking at that 28 level as possible support. So we didn't want to, if indeed we break that support level of 28 for whatever reason, we didn't want to give us too much delta exposure there. And in these uncertain markets, of course, that's something we need to be concerned with. July is the earnings month, so that is the month that we purchased. June is not, so we were selling that. As we go ahead, we have May and June to go before the Junes come into play. So we're looking for that upside drift to, once again, about 32 and possibly about a 10% gain on this particular trade, and then we can get out after that happens. But we will revisit this trade as things move and as the markets fluctuate, and we will get back to you both with emails and these periodic video reviews as well. Thank you very much.